Hi everyone, thank you so much for tuning into my channel. Today we are going to talk about the different loan programs that are available when you're searching for a home. Keep in mind, I am not a lender. I am a realtor who just loves talking about real estate and being a source for information, okay? I'm a student of real estate, and so as I find out information, as I'm studying, I just want to be a source of information, okay? And so keep in mind, there are many programs that are available. Tonight we're going to talk about the conventional loan, the FHA loan, as well as the VA loan. And the idea is to get the information, but talk to your lender and compare. You know, they'll be able to tell you what programs are available to you, and so we want to compare all of your options. All right. So the first program is the conventional program. Keep in mind, this is the most widely used loan program out there. I saw statistics that said that 3 out of 5 individuals actually get a conventional loan when they're home shopping. This program is great. One of the myths that I just want to debunk right off the bat is that you need 20% down to purchase a home. And in fact, with the conventional loan, you can actually qualify as a first-time home buyer for as little as 3%. Through a number of programs, one of them being the Fannie Mae Home Ready program. So again, that's 3% down. You can invest into getting your first time home. Now, if you've already owned a home or you've been on title within the last 3 years, you can also get a conventional loan with putting down 5% down. So again, you don't have to put down 20% to get a home, although you can, right? It's a great option if you're able to put down 20% or more. But just keep in mind, you don't have to. With the conventional loan, it is a very credit score driven loan, meaning that the better your credit score, the better the interest rates you will get. Okay, so this is why it's good to compare to see which loan programs are available to you. Ideally, with the conventional loan, lenders like to see anything above a 620 to get into this loan program. They also like to see, when it comes to your debts, they look at the debt to income ratio. They like to see that that is not larger than 50%. Some lenders will go up to 50%, but not beyond that. Okay. And remember, the debt to income ratio, that's simply looking at how much debt you have to how much income you have coming in. And so, for example, if you made $5,000 a month with the conventional loan, your monthly debts cannot be more than $2,500 a month. So not more than 50% of what you bring in. Okay. With this program, you are able to get gift funds, meaning if you can have some help from a relative like a mom or a dad, an employer, certain grant programs that can help you with the down payment, you are allowed to do that with the conventional loan as well. Okay. Keep in mind, if you are putting down less than 20%, you will have the PMI, which is the private mortgage insurance. This is a fee for being considered more of a high risk, right? If you're putting down less than 20%, you have less skin in the game. And so it's the lender's way of being protected in case there's a default. The good thing with the conventional loan, unlike some of the other loans that I'll talk about, is with the conventional loan, once you reach 20% equity, meaning your home value has gone up or you paid down your debt, the home loan, that PMI, you can call and request that they take it off. At 22%, it should automatically come off. And so that's the great thing about a conventional loan, is that eventually that PMI, that mortgage insurance will fall off of the loan. Okay. Also, with the conventional loan, you have a better chance of getting a condo because not all condos are FHA approved, and so it can be a little more limited. Not that you can't get a condo with an FHA loan, but with a conventional loan, the options are just more vast. They're greater. Okay. So next we have the FHA loan. The FHA loan is a great program for first-time home buyers that do not have a ton of money in the bank. With the FHA loan, you're able to qualify for 3.5% down. It's also a program that has great interest rates that are still very low. Given even if you have credit challenges, you can still get a good interest rate. Also, so to that point, they're more lenient when it comes to your credit score. And so if you have a 580 credit score, you can qualify by FHA guidelines, but keep in mind, many of the lenders that you speak to will want to see above a 600 credit score. But again, a lot more lenient when it comes to the credit for individuals who have average or below average credit to get into a home loan program, okay? Also, when we talk about the debt to income ratio, that DTI, they will go higher up to 56% with your debt to income ratio. So if you have higher student loans, higher personal loans, higher car loans, things like that, you were more likely to qualify for an FHA loan than a conventional loan. Now, we want our DTI to be as low as possible, right? The lower the better, because what that means is you have less debt going into home ownership. So I'm always an advocate for paying down your debt before you get into a home loan, because it just puts you in a better, more comfortable situation to be blessed by your home once you get into home ownership. So while the FHA loan will allow you to go up to 56%, ideally we want to pay down some of that debt so that we're not going into home ownership carrying a heavy debt burden. And that's just my little tip about that, okay? They do like to see that if you've had a foreclosure, it needs to be at least 3 years ago. If there's a bankruptcy, at least 2 years ago. And when it comes to employment, they will want to see 2 years of steady income. And that's the same even for a conventional loan. They like to see steady income, okay? And keep in mind with an FHA loan, if there's been any type of lapse in your employment, like you've been at your job, it's been steady, but maybe there was a disability and you had to take some time off, with the FHA loan, they will want to see that you have been back at your job for at least 6 months in order to qualify, okay? Now, one of the cons with the FHA loan is, of course, the private mortgage insurance, or actually the MIP, the mortgage insurance premium. So there's an upfront cost that's charged when you get your loan that's typically financed into the loan. That's at 1.75% of the loan amount, right? So that's factored into your loan balance, making it a higher loan balance. But there's also the monthly mortgage insurance that's 0.85% of your loan paid in a monthly payment. And so that could be a couple $100 depending on your loan amount. And why this is a con, obviously it's an additional expense that comes with your mortgage. But when it comes to the FHA loan, if you're putting down less than 10%, that MIP, that mortgage insurance premium, it never goes away. It's there for the life of your loan. So unlike the conventional loan where once you reach 20% equity, with the FHA loan, if you're only putting down 3.5%, you can be like on year 29 making your final payment and you're still making that mortgage insurance payment, right? And so most people will refinance out of the FHA loan. It's considered a short-term loan for getting into home ownership, or it can be. That's exactly what I did. I got the FHA loan, and within 5 years, I refinanced out of it into a conventional loan and dropped the PMI insurance pay, which was a couple $100 added to the payment. So it felt like a huge savings at that point, okay? Also, I forgot to mention, one of the great benefits of an FHA loan is that you can actually qualify for purchasing a multi-unit. So a 1 to 4 units. And this is a great option to put down 3.5% to get an investment property. Okay. Now you do have to live in the property, so it does have to be owner occupied. But what that means is you can purchase like a 3 or 4 unit, live in 1 unit, rent out the other 3, and you have income coming in. The lender will require that the income from those other units they will have to cover the mortgage payment, right, for the property. It has to cover the debt service to the property. But think about it, like you're putting down 3.5% to get a income producing investment, right? And so it's like the first step into investing for many people. So I think it's a great option. It's something that I wish I had done, and it's something that I tell my sister. I'm like, when you buy your first property, get a multi-unit, put 3.5% down and take advantage of that, because it's such a great benefit. So those are some of the benefits of the FHA program. Again, great for first-time home buyers, but again, it can be a more costly loan, so it may not be ideal for long-term, okay? The next loan program that we'll talk about is the VA loan. And this loan is awesome. It's really great for veterans, and it's one of the best options available for a home loan. And it should be, right? It's meant to support and provide home ownership to our veterans who have fought for us, who are really giving their life of service. And so I just want to take the time to say thank you so much for all that you've done, everyone that served and that continues to serve and that is protected. We really appreciate you. And so this loan program is for you. With the VA loan, you are able to qualify with 0% down. That's 100% of a home loan without any down payment. And it's also like the VA loan, you do have really great interest rates. There's also very lenient credit scores, and so there's more forgiveness for credit scores that are average or below average. And it's just a really great loan because a lot of lenders are willing to offer very attractive terms for this loan because it is backed by the government, okay? Also, there's lower closing costs that lenders are able to charge for the VA loan. So it's just a more affordable loan in many cases for our veterans. When you're looking at getting qualified for the VA loan, some of the things that you will have to have are the certificate of eligibility. The lender will request to see that, and that's a form that's very easy to get on your own. Or if you can't get it, the lender can pull that for you very easily. They also want to see that you've had 90 days of consecutive wartime service or 181 days of peacetime service, or that you've been in the National Guards for 6 years or the reserves, or if you are a surviving spouse of a veteran, okay? Now, one of the size of the VA loan that can pose an additional cost is there is a funding fee that is associated with this particular loan. And that, again, it is not something that you would have to pay up front. It is financed into the cost of the home loan. And the funding fee, that will depend on a number of factors. It will depend on if you've used the VA home loan before, or depending on how much money you're putting down. So if you're putting down 0% or 3 or 10% or more, that funding fee will vary. And so your lender will be able to share with you based on your situation what that funding fee will be. But there's no mortgage insurance. Again, the interest rates are very competitive. Credit score is very lenient. Even the debt to income ratio is more lenient than the conventional loan as well, okay? And so, yeah, it's a great program for our veterans, again, as it should be. And so those are the programs. That's the conventional loan, the FHA loan, as well as the VA loan. And even within all of those options, there are some great grants that are available that can be paired with those programs that can offer down payment assistance. And I'll do another video talking about that as well. And so the key is really to just know that you have many options available to you. And when you're looking to get qualified for a home loan, just make sure that you are asking, what are all of the options? We don't want to just pigeonhole you to one particular program if there's another one that suits you best. And most lenders will offer all of the options and find the one that best fits you, okay? And so I hope you found this information helpful. Let me know if you have any questions. I'd love to answer them. And yeah, thank you for tuning in. Please like and subscribe and come back. Thank you.